Good morning, everyone. I hope you're all having a great day. Welcome to our webinar on digital banking, strength in numbers towards financial inclusion. So today, we're going to have a fire chat with key industry leaders being represented from the Philippines and Hong Kong, and it's going to be quite a packed event. So I'm your host, Michael Pagsisihan. So just to quickly introduce myself, I'm a senior business development manager for Alibaba Cloud in the Philippines. I focus on banking and financial services. I previously covered the Southeast Asia region across 6 countries, spearheading data-driven cloud transformation scenarios. So I've been around the industry more than 10 years of experience as a trusted advisor, both local and regional customers. Okay, so quickly, moving forward to our very first speaker, I would like to introduce Mr. King Leung. He's the head of FinTech at Invest Hong Kong, the department of Hong Kong responsible for attracting foreign direct investments. He's also a visiting lecturer in FinTech for China business of the University of Hong Kong in China. And also, he's an angel investor in startups involving artificial intelligence, big data, and insurtech. He's going to be talking about the impact of financial services transformation towards financial inclusion. Over to you, Sir King.
Hi, hello everyone. Hi, Mickey. And I guess this is a great privilege to meet with all of you virtually. And basically today, I just want to basically interact with all the other major speakers to basically help you understand where Hong Kong governments, including a lot of our, the regulators, the accelerators, that's Hong Kong, and all the what we call the Hong Kong Inc. partners, are working together to try to foster the fintech development not only in Hong Kong, but also playing a role in the region. So with that, I guess perhaps I would get some help from Mickey in terms of helping us to focus on any particular areas for us to focus so that the audience can get what they need. So Mickey, back to you.
Okay. Our next, one of our next speakers would be Philippines, a leading and award-winning thought leader on digital transformation and inclusive digital finance. Merited over 50 global and regional awards, including being one of the top 100 fintech leaders in Asia. He's known as the Mr. Fintech of the Philippines, and also the Executive Vice President, Chief Innovation and Inclusion Officer of RCBC, and he also acts as the Chief Digital Transformation Advisor for the Yochenko Group of Companies, Sir Lito Villanueva.
Thank you so much and good morning to all. If I may be allowed to share my screen. Yeah. Okay. Again, good morning, and of course, thank you to Alibaba Cloud and of course our co-panelists, co-speakers who are present today, and good morning to all our online viewers. And of course, we are very much delighted to be sharing with you some of the insights as well as the things that we've been doing for the past year, especially at the height of in the height of the pandemic. And of course, what we will be sharing with you this morning would be the things that that the FinTech Alliance in the Philippines has been doing, especially in terms of providing the assistance to government for in coping up with the challenges posed by COVID-19. Okay, so if you can see my screen. Okay, so just to give you a snapshot of what FinTech Alliance is in the Philippines, we started, or we created this organization way back 2018, and this was started only by around 5 digital players in the country, the leading fintech players in the country, and it has now expanded to over 50 fintech and digital companies operating in the Philippines. And one of the things that would really be sterling in terms of or in terms of primary objective of the alliance is on how we could provide thought leadership to our regulators, to our legislators, in so far as crafting, enabling regulatory framework in the development of the fintech industry. So for the past couple of years, I mean, we've been the go-to organization so far as providing our inputs for some pieces of legislation, such as, for example, the one that you're seeing on the screen on the the legislation on taxing digital economy, or what we call the digital taxation. Now, of course, aside from this, we are also, providing inputs to the regulator, to legislators, especially during the pandemic, that when they came up with stimulus package, as well as financial economic assistance to Filipinos, facing those challenges. I mean, we are, such as, for example, the initial idea of granting a one-year loan moratorium. So we were able to push or lobby to a Congress to reduce that to just a maximum of 60 days. So practically this law, or what we call Bayanihan 2 law, has been extended for another 2 months. And another thing here is that, of course, aside from all of those pieces of legislations, we also provided inputs and recommendations or comments to a lot of regulatory drafts that would really impact the digital economy or the fintech industry. And I think the topic that we have right now is really geared towards how to further promote inclusive digital finance, and how to harness the key imperatives or impact or benefits that digital transformation has been doing for the country, especially the adoption of consumers leading towards digital adoption. And the first digital webinar or digital event that was attended by the Bangko Sentral ng Pilipinas governor, our very own Governor Benjamin Jokno, was the event that was launched by the FinTech Alliance. This was again the first digital forum wherein we were able to come up with a roadmap on how we could pump prime a digital economy post COVID-19. So, in fact, this was well attended because in just one event, we had about more than 100,000 concurrent views. And of course, we have expanded as well in terms of collaboration within the framework of open banking, of course, an open finance framework. Having to collaborate with not just with the local fintech players, but as well as the regional, digital players in Southeast Asia, especially with our collaboration or affiliation with the ASEAN Financial Innovation Network. And during the last Singapore FinTech Festival, we formalized this agreement, and we now came up with our own FinTech Sandbox that would now have that collaboration across, between and amongst FinTech players, not just within the Philippines, but as well as in the region. And of course, last September, we digitally released the Philippines FinTech Report, which was produced by FinTech Singapore for us, FinTech News Singapore, in terms of having to really provide a thorough assessment of how the Philippine fintech industry is in terms of its health, in terms of its present condition, and the prospects for growth. And recently, in fact, last month, we had of course, this is part of our continuous dialogue with the regulators. And of course, part of the economic stimulus or economic package that the government is really providing or has been providing to the Filipinos is, of course, capping interest rates. They started to cap the interest rates on credit cards at 2% per month, which used to be market forces, which could go as high as 3.25% or even 4% a month, but it has now capped to 2% for credit cards, and now it will be expanded to even loans, consumer loans, or payday loans, and it's now being discussed now together with other fintech players in the industry such as Home Credit, Cashalo, and so on and so forth, right? Because remember, this is not just within the fintech space, but also in the banking industry as well. Um, and the good thing here is that I think one of the key highlights that I want to point out here is the fact that because Philippines is among the actually the last country in Southeast Asia not to have its own national ID system, and good thing, and thank God that we now have our the long wait is over, that we now the country, the Philippines, now has its own national ID. Well, it started, the process has started. In fact, they started this last October, and as of December 2020, they now have registered around 10 million of the 107 million Filipinos, and so far the objective or the target for this year is 70 million Filipinos, by end 2021. Note that the key barrier to financial entry or to financial services of Filipinos would be not having to have the credentials for them to be onboarded. So KYC has been a major stumbling block. So with the initiative of government to now have this national ID system of PhilSys, we will now be able to provide greater access to financial services to Filipinos, because this is well integrated into the twin goals of the BSP, that by 2023, 50% of financial transactions in the Philippines should be digital, and that 70% of adult Filipinos should be part of the formal financial system. So I think that vision of those twin goals, or the realization of those twin goals by 2023 could now be easily realized, given the fact that government has been now very aggressive in coming up with this registration to ensure that they will be able to distribute, or they will be able to create a digital identity for every Filipino in the country. And to give you a snapshot of what we are doing, I mean, of course, aside from me being the chairman of the FinTech Alliance, I'm also the Chief Innovation and Inclusion Officer of RCBC. And just to share with you, in the past, at the height of the pandemic, it started in March when government declared a hard lockdown on March 16. Practically we pivoted. We had to really throw out of the window some of our strategies that were crafted prior to COVID. So because we want to make sure that our all the initiatives that we do are all relevant and responsive. So we thank the regional and global award giving bodies that in the span of 10 months we were able to merit six accolades, or 6 awards, and even bagging the recognition of the Philippines Best Digital Bank. And in fact, when we launched the mobile app called Discartech, which is the country's the first and only Taglish inclusion super app in the Philippines, in the middle, the height of the pandemic, it was in July. So we were quite afraid on how the public will be receiving this or will be embracing this, but we were pleasantly surprised that it became number 1. And despite the difficulties, etc. In fact, even the App Annie made a report that it was 2020's number 1 breakout Philippine finance app. And just to give you my last slide would be just to give you some numbers, so to give you some meat into what I'm trying to share with you now, as regards the impact of really providing digital transformation or digitalizing transactions in the financial system. So when the Philippine government asked for assistance on how they could quickly distribute the social amelioration program, or this would be the emergency cash subsidy that would be given to the poor and vulnerable families in the Philippines greatly impacted by COVID-19. So as of December 31, we were able to disburse in excess of 259 million US dollars to about 3.3 million families. That would actually cover around 16.6 million individuals in 72 out of 81 provinces nationwide. So, I mean, just to give you some sense of how big the initiative, insofar as having the tool of digital be at the front, back, and center of these initiatives that we are doing. Because again, at the end of the day, the ultimate measure of success of any digital intervention should always be consumer adoption, and how it would actually make a dent in the social, in the lives of every Filipinos in the country. And with that, thank you so much, and again, good morning.
Thank you so much, Sir Lito, for sharing very good insights.
Thank you.
I like what you highlighted earlier in terms of the point that the ultimate measure of success for digital transformation is consumer adoption, right? And it is indeed a very collaborative environment right now in the Philippines, wherein RCBC has been spearheading together with the FinTech Alliance, the big banks, together with the fintech companies, as we all push forward towards financial inclusion. Okay, as our next speaker, I'll have to go back to Mr. King Leung, and as he will discuss his point of view around pushing for financial inclusion, given the experience that Hong Kong has been accelerating the launch of different types of virtual banks and digital payments. So, Mr. King, hand over to you.
Okay, thank you very much. Now, at first I was trying to pull up some slides, but then I had some technical difficulty. So I guess I would just quickly explain and share with the audience about the landscape in Hong Kong. Now, obviously, the Hong Kong has been very blessed to be an international financial center serving not only the region, but also globally for a few decades. Now, because of that kind of background, naturally, we have three things that are quite a unique characteristics for the Hong Kong market when it comes to fintech. Now, the first I want to share with everyone is that when we look at the whole fintech space, so obviously there's the both B2C and B2B focus. Now, but then when we look at internationally, a lot of the fintech companies, actually many of the fintech companies have been engaging in B2B activities. So they're trying to put together something to sell to financial institutions. Now, so for that perspective, I think the Hong Kong environment has been pretty rich soil for people to essentially sell their solutions, because now as an international financial center, we have a pretty rich sets of banks, over 160 banks, of which 70% of the world's 100 largest banks have their presence in Hong Kong. Now, the other big segment in financial services is insurance. So basically, of the top 70 plus of the 100 largest insurance companies also have presence in Hong Kong. So as a result, you can imagine, oh, by the way, there's another segment that is the whole wealth and asset management. We get like thousands of asset managers in Hong Kong. So of course, you count the big boys, right? And the tier one guys, all the familiar names you can think of. Chances are they will have presence in Hong Kong. The BlackRock, the Carlyle, the JP Morgan, the Goldman. I mean, all the big boys are here in Hong Kong. Now, as a result, so when you are in a position of selling B2B solutions, there's a very big set of clients you can approach. So this is why I think the first bit I want to share with the audience is that Hong Kong, particularly from a B2B perspective, we have a very rich environment for you to sell to. Now, at the same time, you may think, well, actually, in a B2C fintech business, then what does Hong Kong has to offer as an opportunity? Now, actually, Hong Kong, as you might have come across in the media, particularly in the past, I would say 1 to 2 years, there's a lot of media coverage around a big sandbox experiment, if you will, by mainland China, and that is the Greater Bay Area. Now, because as you may have come across in the news, actually started from last year, Beijing, the leadership in Beijing decided to open up the financial services sector to foreign ownership. In the past, there's a certain percentage of ownership for the local guys in the JV environments, but started from last year, actually international players can go all in to take majority ownership. So that basically got a lot of the international players very excited. Now, but having said that, China is a very big market, it's still growing. So that's why they're trying to open things up in a more gradual and more controlled manner. So that's why the Greater Bay Area has been picked as one of the major experimentation areas, if you will, or in other words, it's a sandbox. So basically, a lot of the sectors from asset management, payments, banking, I mean, basically everything you can think of in financial services. The leadership in Beijing, together with the regulators, have laid out a game plan of opening up 26 different areas within the financial services in the GBA. Now, of course, Hong Kong being the international arm among the GBA cities, and the GBA, by the way, consists of 11 cities in the southern part of China, including Hong Kong, Shenzhen, Guangzhou, Dongguan, and so forth. Because of the Hong Kong decades of international role in the finance, basically we are responsible to try to, in a way, help international players to enter the China sandbox in GBA, so that basically as it gradually opens up, opportunities in payments, in insurance, wealth management become very exciting, because the population of the GBA is essentially the 71 million people. And in terms of GDP, is roughly 1.7 trillion US dollar. So to put in perspective, 1.7 trillion is approximately the size of Canada or Spain, which is a pretty large area. So again, enough said about opportunity, which is the first bit in which Hong Kong can play a good role for not only Hong Kong, but also regionally, including Philippines. Now, the second bit of it is about the whole financing. Of course, I think many of you would have come across a lot of news about Hong Kong making headlines on our IPO market, the Hong Kong Stock Exchange. Just a lot of money being raised. So in the past 11 years, Hong Kong has been ranked #1 as an IPO market, the largest IPO market in the world for 7 of the past 11 years. So that's why in terms of public fundraising, Hong Kong is really a good place to be. Now, but not only that, in the past number of years, the Hong Kong government, together with our Hong Kong local private sector partners, have been working really hard to try to push the private sector investment as well, particularly in fintech. So basically, we look at the private sector VC investment into fintech over the past 5-6 years, as an aggregate, over 1.5 billion US dollar of private capital have been invested into the fintechs in Hong Kong. So it's a pretty sizable amounts. So that also, again, highlights Hong Kong as a good place for fundraising. Now, the third part of it is about the role from what I consider as a Hong Kong Inc., as I just briefly introduced. And that consists of not only Invest Hong Kong, but also, of course, the Policy Bureau, FSDB, Financial Services Treasury Bureau, consists of the regulators, the HMA, which is the banking regulator, and the de facto central bank, the SFC, looking after the securities, the crypto space, and also, the insurance authority, of course, looking after insurance. We got the custom department looking after the payment space. So we actually have a lot of players, and also the accelerators, the Cyberport and Science Park. So these are the names that you might have come across in the past. So these are all the partners of ours, in the public sector that we work closely with. At the same time, on the private sector side, so Ben will be speaking very shortly. He has been, I guess, leading up a lot of the very exciting new facilitation on the private sector side to hopefully help bridge, the private sector and the public sector to work together so that we can foster the fintech ecosystem. And one of the things that the public sector has done is that we have launched numerous support schemes from the governments to incentivize people to start technology businesses, particularly in fintech. And actually, my colleagues have actually done the math. So when we look at all the different government subsidies, and then we add them all up together, actually, the total sum of subsidies that you're able to get from Hong Kong governments to incentivize you to set up some sort of technology venture in Hong Kong, actually it adds up to roughly 3 million US. Okay, it's a pretty sizable chunks. Of course, I think many of these schemes are matching basis, so you have to invest on your own, and then we sort of match you on a dollar-to-dollar basis. But then there are numerous schemes. So again, these are just a lot of information behind this. So I'm just happy to take on questions, perhaps during Q&A, or you can send me a message via LinkedIn and so on. And I'm happy to connect you with our colleagues so that we can feed you with the more detailed information. But in short, over 3 million US dollar of the subsidies from Hong Kong governments to incentivize some really cutting edge enterprise to set up in Hong Kong from a technology perspective. Now, so the three things I just mentioned, just quickly summarize, is that the opportunities in Hong Kong are quite massive from both B2B and B2C. From an investment standpoint or fundraising standpoint, both public sector IPOs and also the private VCs are also super vibrant. And the third is that the Hong Kong government has done a great job in putting up different subsidies to help some aspiring entrepreneurs to succeed in Hong Kong. So essentially, of all these resources, you can just come to us, Invest Hong Kong, and we can help you navigate and connect you to the right party to get you sorted. So with that, I guess I just want to stop here, and then I will just perhaps let the next speaker to share their thoughts. So thank you very much.
Thank you very much, Mr. King, for sharing your thoughts. I like what you highlighted around Hong Kong being a major player in terms of experimentation in financial services and providing solid value not only domestically within Hong Kong and China, but also to the region, the Asia-Pacific region as a whole. So we can all learn from that. I think that's one of the goals of this session as well, is to be able to share best practices, learnings, and insights cross countries between Hong Kong and the Philippines. Okay. We move now to our next speaker. But again, before we start with our next speaker, I'll encourage our audience to ask questions. You can type it in the Q&A. There's a Q&A function in our webinar, and we'll be able to attend to that questions as we go along through this webinar. Our next speaker is the CEO and managing partner of Kinlan and Associates. He's also the chairman of FinTech Association of Hong Kong, and also an adjunct professor at the AIT School of Management, Mr. Benjamin Kinlan.
Thank you very much, Mikey. I'll apologize in advance because the second that I'm about to speak is the second that renovations start happening in my building. So if you start hearing drilling going on, it's definitely not from my place, but welcome to Hong Kong working from home situations. Anyway, as Mikey introduced, I'm the CEO and managing partner of Quinlan & Associates. We are a strategic consultancy. We specialize a lot in financial services and fintech in particular, and the chairman of the FinTech Association of Hong Kong. And for those of you who don't know about the FinTech Association, we are effectively the industry representative body for fintechs in the city. We have about 1,700 members, of which 300 plus are corporate members, and we really stand on three key principles, which is all around advocacy, collaboration, and education. So as King mentioned, being in InvestHK, this is one of our key partners within the ecosystem among some of the various other entities that he mentioned. But overall, our job is to really, put forward the kind of best practice and views for how we can bring Hong Kong's fintech ecosystem to the next level, and basically put it on the global map. I think King gave a very good introduction of Hong Kong more broadly. And I think within the context of this discussion, it's really around the digital banking environment. So as many of you may know, Hong Kong was the first cab off the rank in Asia in terms of the virtual banks, right? And in the last 12 months, so from about March of 2020 till December 2020, there were 8 new virtual banks that launched in the city. So it was really a quite an interesting time. Before I go into, I guess, talking a little bit about the virtual banks and what they're doing, the whole drive for this was to really promote financial innovation, really enhanced customer experience, and potentially facilitate financial inclusion. I say potentially because I think a nice way to start this is just to give you a few facts and figures about Hong Kong's banking market, just so you can put it in context, because I really see the opportunity here as somewhat different from a market like Philippines or other markets within Southeast Asia, okay? So what are some key takeaways? I think overall, the reality is Hong Kong as an international financial center is actually relatively highly banked, right? This is reflected in the financial sophistication of its populace. I think about 95% of people within Hong Kong have access to banking services. We have the second highest credit card penetration rate in Asia Pacific among the populace. And on average, we hold 2.63 credit cards per individual. So you can argue that, well, this appears to be a pretty well-banked market. But I guess if you look at the competition within Hong Kong, it's quite interesting because there's really 4 key banks that dominate what I would call the retail and commercial banking landscape. And that is HSBC, which I would say is the dominant, followed by Bank of China, Hong Kong. Then you have Hang Seng Bank, which is a subsidiary of HSBC, and you have Standard Chartered. And really, if you look at the market share that these institutions make up, those 4 institutions basically comprise of 80% of mortgage lending, 75% of credit cards, 70% of retail, 60% of retail deposits, and then in the corporate lending space, around 40%. So there really is a kind of, for many years, what I would call a well-entrenched oligopoly here. So you might be asking, well, why is this a problem? Why do you need, for such a banked market, why do you need to launch the VBs? And the reality is, I don't look at Hong Kong as an unbanked market. I don't necessarily look at it as an underbanked market either. I look at it as potentially an underserved market. And I think the reality is when you're in a situation where I guess you have such a stranglehold on what is going on, one of the key pain points that people kept mentioning, and there's many aspects to this, but let's just say you look at the onboarding times, right? Something as simple as that in Hong Kong, if you're an individual, it could take a few days in person in a branch with paperwork. If you're a business, add on a few weeks to that, it could be a few months, right? There's a lot of technology that's hoping to really streamline what I would call the customer experience pain points that may be felt by residents within the city. And, if you look at some of the VBs now, the onboarding times that they're quoting, I think the fastest one is about 2 minutes and 8 seconds, right? And I signed up to a virtual bank as well. And it's basically take out your phone, do a selfie, take a photo of your proof of address, and take a photo of your Hong Kong ID. And then voila, you are finished. And if I compare that experience to what we've experienced as customers before within the city, it is fundamentally different, right? Same thing, even if you look on the SME side, you're seeing a lot of the businesses in Hong Kong, actually very few of them fund their businesses through lending. A lot of them actually use retained earnings. And I think with many SMEs around the world, and particularly in Southeast Asia, and I've seen these stats and done these numbers in the Philippines, but there is a big funding gap with SMEs, right? They tend to comprise the largest proportion of your economy in terms of representing your GDP output, but the funding gap is massive. And I think the reality of that is many of the financial institutions, be it in here or be it in other jurisdictions around Asia Pacific, have a different kind of risk appetite and mindset to lending towards small to medium enterprises. So as a result, the processes can be long, they can be partially successful, you often need to post collateral. So in regards to that, you're seeing, yes, there are potential opportunities here to make this work. And why did the HKMA greenlight this initiative? And really, I think the mix of potential pain points with the incumbents, as well as just how digitally savvy the Hong Kong population is bodes well for an opportunity for the virtual banks, right? And the market here is very, very large. So as I mentioned, there's 8 VBs that are going to be, that have recently launched. And if you look at who they are, these are the likes of, I don't know if the names will resonate, but Ant Bank, and you can obviously understand who that might be connected with. Ant. Mox is another bank, which is basically the virtual bank of Standard Chartered and a group of subsidiaries. You've got WeLab, Zhong'an, and Livy. These are all some big names that are tied to what I would call heavy, either financial institutions or technology companies. So the backers are really quite scalable and large. And I think that shows a commitment to obviously building this ecosystem in a sustained way. And they've come roaring out of the gate, right? Offering great savings rates. Some are offering time deposit products. A few of them, it's early days, right? So a few of them started offering personal loans, business loans. All of them are basically pushing forward with the transfer and payment services, debit cards as well. One of them has foreign exchange. We've also got potential insurance, budgeting tools, but this is really what I would call the preliminary formation stage of your first few months in operation. And a lot of technology being used across the value chain, from the customer acquisition side, from like social media. Like the whole value proposition has changed. The old bank ads on billboards, it's now the YouTube videos, the Facebook ads, different kind of social media engagement and building communities, appealing to a digital savvy customer base. Biometric facial recognition, eKYC, all of that I talk about in my example to really expedite that onboarding process. There's AI and big data analytics being used to really understand and personalize offerings to customers, QR enabled payments, right? You've got online loan origination as well, so fast approvals and credit scoring systems that you don't need to go through a manual credit process anymore. Mox Bank is a case in point because it's completely on public cloud infrastructure, right? Which I think is a big milestone for a bank, right? To put everything on a public cloud. And then I think with that, there's also things around customer service with chat bots, different kind of biometric recognition, encryption, really putting security front and center of mind, because obviously that's key to the success of these institutions working. And I would say it's going to be a very interesting path going forward. I don't want to go into so much detail that I bore you guys with facts and figures around the VBs. What I would urge you do is keep an eye in coming weeks on a report that will come out from the FinTech Association of Hong Kong and Quinlan and Associates, giving you all the details you need about the Hong Kong virtual banking ecosystem. But I think overall, it sends a very clear signal to the market that digitalization is here to stay. COVID has changed behaviors. We're fundamentally moving to an online payments, transaction, and communication world. I mean, all of us are on virtual conference right now. This is the way of doing things. So I think the timing of when the VBs came out was quite fortuitous in the sense that if there's one good thing I could say that came from COVID-19, it was catalyzing that move to digital adoption and really moving that ahead. Obviously, the path ahead, who knows? 8 VBs, people can say, is there a big enough market? That's one of the questions. King was talking about the Greater Bay opportunities, and I think that opens up a massive potential pot of opportunity here. But right now, the VBs are limited to just serving Hong Kong ID holders. But who knows what the future holds. And I think when you compare it, as I mentioned, I'll finalize my comments on this, with the situation in a market like Philippines, with a very high unbanked population, with people that don't have access to traditional banking services. but you do have high mobile penetration rates, right? It's a fundamentally different proposition about, I guess, what the VBs would need to do to succeed here, which is really wrestling away market share from established incumbents, versus what I think a virtual bank proposition could do in some of the ASEAN markets in terms of tapping into new customers that traditionally have not been able to access badly needed financial services solutions. So anyway, I hope you found just that a general interesting introduction to the ecosystem. And I know as we go through this, we're going to talk about some of these in a bit more detail. So thank you.
Thank you so much, Sir Ben, for sharing your insights. I like what you highlighted around the point that Hong Kong is not an unbanked market, but an underserved market. Very good point to highlight. Okay. Again, we're seeing questions right now. Please do keep the questions coming in our Q&A tab. And as we move forward, I'm going to be introducing our next speaker, who's Gary Sien. He's going to be talking about the role that Alibaba Cloud plays in terms of enabling these concepts, these testing theories, and so on in terms of digital adoption. So Gary Sien is our regional solutions architect for FinTech and innovation. He's based in Hong Kong, formerly a head of technology for ANZ China, and has spent the last decade working across the Asia-Pacific region. He's also the co-chair of Cloud and Cybersecurity Committee of FinTech Association of Hong Kong. Gary, I now turn over the floor to you. If you can share your slides.
No problem. Okay, so thank you. Thank you to the audience. Thank you, Mikey. Thank you to the speakers. Gives me great pleasure today to share with you how we at Alibaba Cloud go about really tackling some of the points that all the speakers talked about in terms of the challenges. If you look at the way financial services broadly look at we sort of summarize it into sort of 6 key challenges around the way you manage your data, for example, as more and more of your transactions, for example, your digital touch points touches your customers on a pure digital format. How are you going about, first of all, managing, right? So that you can make sense of the data, and then really having the ability to then analyze, right? Have some insights, and then you can then actually act on it. And then, of course, having run a banking entity's technology before running data centers, we're talking about very fundamental things around just stability, right? So does the network, right? Does it work, right? When it comes to if your customers hovering between different geographic locations, can they be connected to you, especially now given pure online, especially both in Hong Kong and Philippines, with COVID lingering around. Our customers are forced, right, to some extent, to interact with us as a financial institution on a pure online basis. So the ability to service them, so even your system works, but you have issues with your network, then that's going to cause some very unhappy customers that's going to come knocking on your door. So that's around the network piece. And of course, we talk about scalability, in the influx of transactions, and all of a sudden, not being able to offer your traditional channels of choice, be it, your physical footprint that you can no longer offer the service, then all of a sudden there's a big rush, right? We've seen so many clients who had issues when there was a mad rush using their online, right? Be it their websites, be it their chatbots, be it their mobile app, all sorts of different infrastructure-related issues were surfaced, right, as part of this sudden influx. So And of course, the most important, in my opinion, regulatory compliance, right? Working very closely with the regulator, being able to know. But what I think what we're saying now, both covering Hong Kong and Philippines, we're seeing a lot more openness to the use of new technology, and I'll share with you a little bit more from a Hong Kong perspective in terms of what they deem as RegTech, which is a bit different to, I think, to many of us, right? Especially for me, I've been in banking for quite a while. I think the definition of RegTech has certainly evolved rapidly, and of course, what underpins regulatory compliance, usually it will look into a lot around sort of our traditional metrics around cybersecurity, right, which is privacy and so on. So without, I don't want you to read every word on this slide, but really just take a quick look into the text in orange, right? So this is a quick summary of what HKMA has done in terms of promoting the use of regulatory technology. And they have a sandbox set up to promote the usage. But if you look at the five, the key published use cases, they're quite standard in some sense, right? Cyber defense, risk management, credit risk management, AML. Now 4 and 5 is interesting because I think as a result of COVID-19, as a result of a large workforce working away from the corporate head office or from the branch locations, the focus on conduct risk and also additional operational challenges, right? So how do you do something? I saw an audience who had a question, giving financial advice completely through online. Is it possible? Well, I can give you the answer. Yes, it's absolutely possible. There's technologies out there. In fact, there's many institutions in Hong Kong that is already exploring the use of, in fact, not exploring, implementing the use of, for example, video servicing infrastructure to facilitate, a completely remote from financial needs analysis all the way to the risk assessment to then the actual customer, doing an order for their, for example, insurance policy, or even sort of wealth management related transactions, which traditionally has a much higher risk in terms of mis-selling, right? So, relationship managers not telling all the facts around a particular product, and the customer is not aware of the risk that they are buying into. So if you look at the text in oranges, right? In some sense, the way HKMA looks at it is that's all RegTech. But if you look at what's in there, right? Biometric, AI, RPA, machine learning, what Ben mentioned as well, right? The OCR, the eKYC, data mining, right? Using so if you look at that, it's not really what we used to think about as RegTech. So you can have a look at in this case, then it's like then for all the different financial institutions, no matter whether you're from big to small, right? There's a need to then really put this as a front and center when it comes to, okay, when you're actually addressing things like credit risk, are you actually, for example, looking at the way of using, for example, alternate data to support your credit scoring, right? As opposed to, and because if you really want to be true to using what you know about the customer and giving them what I call hyper-personalization decisions, then you've got to start looking at non-traditional ways of making decisions, because risk will continuously evolve, because the way the users use our banking services or financial services will always change, right? So you've got to adjust, right? You've got to, so you can see the regulator is already changing the way they're looking at the technology, they're encouraging. So absolutely, you should be very open to explore, work with your technology teams, work with your different providers, and really look into, if I want to work on cyber defense, if I want to work on credit risk management, AML, conduct risk, operational challenges, what are some of the already, somewhat what I call mature Because if you think about it, what are we doing right now for the webinar? Soon. It is not new. But all of a sudden, because of the lack of choices, you can say, right? And also the change of environment, soon became obviously very famous. Even my family talks about it now, whereas I think previously it was exclusive to only your corporate users. So there's a fundamental shift now in terms of the market. Now, I'm not going to go through sort of the benefits of each sort of what I call public cloud, but really I just want you to take away that given the rapid change of the financial services landscape, you need an ability to be very flexible and to be able to innovate and fail at the lowest possible cost, so that you can quickly experiment, right? You can, of course, you can accelerate your time to market as a result. You can really try things out without having to do very heavy upfront spend on, where previously if I run a data center, if I know I invest in it, I know at minimum it's going to take 5 years for it to amortize, right? So the way we invest will also change. The way we do budgeting within our organization will start to evolve from annual budgeting to quarterly, right? In some organizations, I've seen monthly reallocation of budget. So that has a big impact to the way we make decisions in terms of what we do, right? Well, in typical banking talk, right? To run the bank budget, to change the bank budget. But now what we're seeing is it's a mix. It's starting to, the line starts to muddle a lot more. It's really focusing on the capability that the institution needs to service their customers, in the best manner. And of course, it's going to drive more efficiency for you. But I think I want to look at point 4 and 5 in terms of data protection and the continuity, right? Because I think that's the most important, because running your physical infrastructure yourself is a very taxing, very labor and resource intensive activity. And in fact, Gartner has a recent report that if you do it right, security using cloud-based technology is actually more secure than you having your in-house team trying to do yourself. Now, of course, the big if is if you do it right. So this is where institutions needs to really embrace, of course, working with different providers. Of course, we can also help, but it's really been open to the evolution, right, of where the technology is moving towards, and really leveraging the best of the technology in order to service what are some of your key scenarios. And of course, being the co-chair of FinTech Association for Cybersecurity and Cloud, I will tell you, of course, cybersecurity and cloud is definitely two things that you really, really need to pay a lot of attention to. So Alibaba Cloud in the context of our digital ecosystem within Alibaba Group. And as you can see, actually in short, just think of us as the foundation of Alibaba Group. And also if Alibaba Group decides to export any capability to our customers, to our market, we serve it through Alibaba Cloud. So we will be responsible for the overall packaging of the technology. As you can see, we support the FinTech services, the logistics, of course, our 2C and 2B businesses in terms of e-commerce, in terms of trade, so on and so forth. So it's the backbone of the group. And also it is responsible for also making sure that it is, as a product, it is well structured, it's safe, it's secure, and it works. It works when you need it to work. I think that's the most important. Specifically for financial services, so I work with a lot of clients across, in fact, Hong Kong, Philippines, Macau, Taiwan, and Korea. So Hong Kong and Philippines being, as Ben had mentioned, two very different market, but at the same time, it's somewhat similar. The scale, of course, is different, right? If you look at the population differences between the two locations, but if you look at the fundamentals of from a financial institution's perspective, it doesn't really deviate away from what I call the 4 core focus. Number one, that your ability to digitally onboard and serve, right? Number one, your channels. right? If your channels doesn't work, it doesn't really matter how secure and stable the rest of your system are. It just doesn't work. Your customers will walk away. Second, what we call agility at the core. Now, the definition of core here is beyond just core banking. It talks about, of course, it talks about core banking, but it also talks about what we do outside of the core. So having an open platform, API connectivity to, especially now with open banking, garnering some tractions in Hong Kong and also across the Southeast Asia region, the ability to connect with what I call the FinTech ecosystem out there, right? Working with different partners and really to allow you not having to be what I call in product management terms, product manufacturer for every single thing that you sell. You can actually work with a lot of product manufacturers outside, but at the end, you own the distribution, you own the sales, right? You have the RMs, you have the digital channels, etc. So, and it also talks about where HMA talks about the RegTech piece. We also put, you know, your internal external collaboration toolings, right? So it's things that are similar to, for example, Zoom. We have DingTalk. It really allows people to work together through a common platform. And then, of course, data, the use of data, you know, the ability to bring together data across internal and external sources. And then we also have a blockchain piece that really then it's about the additional trust that we put onto the data. You can imagine trust is the fundamentals of financial institutions, especially when we talk about financial inclusion, is how are you making decisions? You're making pure database, data-driven decisions. So you have the ability to trust that data that are coming in. And of course, finally, it's the secure and stable foundation. Your service needs to work, your hardware needs to work, your network needs to work, your database needs to work, it needs to be stable. Okay, so I'll just finish off here. We've been doing a lot of work on regulatory compliance. So we've done independent audits across Hong Kong, 3 different regulators, and we've also done it across against the BSP requirements as well. So all these are independent and objective, and also we focus on data privacy with PDPO in Hong Kong, and also RA 1073 in the Philippines, and of course the ISO standards. So compliance, because the fact that we have our own financial services business running on running on cloud, and in fact the next slide I want to quickly show you is this is a reference architecture, but we have a live bank in Hong Kong running 100% public cloud using our own infrastructure in Hong Kong. We've got 3 data centers in Hong Kong. You can see it's end-to-end. It goes from servers to security to network acceleration, just to make sure that no matter who you are, where you're using our services, you can be rest assured that it's gone through regulatory compliance, it's safe, it's secure, and you could be cross-border, right? You could be traveling, like, of course now travel is a bit harder, but if they went into the mainland or even if they went to Philippines and using our service, they will feel like that they're in Hong Kong with very, very little noticeable differences. Without talking every single solution that we have, but just some really quick snapshot, and it sort of coincides with what I've shared before from above with sort of HMA talking about the sort of RegTech piece. EKYC, we'll talk about video servicing. We've got chatbot, and we even now there's some, I think as COVID starts to recover, we see a lot of focus also on self-service kiosks. So you're going to have your branches are no longer be your traditional heavy branches. It's going to go for a lot more sort of the light, the sort of the pop-up type mini stores, which will have self-service machine connecting to a video telling, etc. And when I talk about Agile Core, I mentioned, so your ability to develop through cloud native technologies, that's going to open up your ability to conduct a lot more collaboration with sort of external providers, having a strong open API gateway, and then internal external collaboration platform. And of course, the last 2 is really around the way of using data, right? So using NLP to read articles to derive insights, AI machine learning. It's actually the same technology that powers our chatbot, and of course your ability to work with different data sources and bringing it all together. So I'll stop it here. So we're number one, for those who doesn't know, number one in Asia Pacific for cloud infrastructure. Of course, also number one in mainland China. We have a very strong global reach, in particular in Southeast Asia. So stay tuned to some of the news that will happen. We have for Philippines. So Hong Kong already has 3 data centers. We're looking forward to share some news for you for the Philippines market in the near future. So Mikey and host, we'll hand it back to you.
Okay. Thank you very much, Gary, for sharing a very extensive presentation on the value of Alibaba Cloud in unlocking this financial inclusion journey. Right. So we have read through the questions that you sent. Thank you to all the audience members. And we're going to start off with a panel discussion now. And I'll be injecting the live questions from the audience. So can I please ask all the attendees the panelists to turn on their cameras? Oh, there you go. Welcome back, everyone. I have here my very first question. The first question is, it is exciting to see how Hong Kong is moving fast in transformation. May I ask the speaker's point of view regarding what potential value or synergy bought by such evolution to companies or markets outside Hong Kong? I'll let volunteers answer this. Anyone?
Sure.
I'll take a step.
Okay.
Now, so first of all, I just want to put in context, particularly at my current role at Invest Hong Kong. I'm actually quite privileged to have an opportunity to talk to a lot of smart people around the world. Because this part of my job is to look at people from US, UK, Switzerland, Israel, of course in Southeast Asia, Australia. I mean, all the major economies you can think of. Chances are I've talked to some really smart entrepreneurs in those markets. Now, the one thing I just want to say is that because Hong Kong is quite large, to be honest. It's not just a city. The market, as a B2B market, is quite sizable because of the international financial center position. So that's why a lot of companies would decide to use Hong Kong as a springboard to other markets. So that's why we have a collection of companies literally from around the world. Now, as a result, when we talk to folks from other countries, let's say as far as like Latin America, they're like, well, okay, we are in Latin America. We are not really sure whether or not we want to compete in the Hong Kong markets. So what's the kind of advice you have for us? Because I talk to people from like Chile, like Brazil, Mexico, and whatnot. Now, in a way, I can see where they're coming from. But the one thing that is consistent across all these folks is that they do see that Hong Kong is a great place to try something out. It's really like a great sandbox. If you can somehow get your solution to work in Hong Kong, getting through this investigation by the regulators and whatnot, chances are your solution is pretty well class. Okay. Now, at the same time, some folks also look at Hong Kong as a place to either raise money and to set up a small team to build what they call an innovation lab. It doesn't have to be a big team, a large office. It can be just a few people, like 1, 2, 3 headcounts. Now, but the nice thing is that you can basically use Hong Kong as a place to collect a lot of market intelligence, where some business models, technologies that you see from in Hong Kong, or as well as in mainland China, chances are some of those insights can be reapplied to your own home market or to other markets you want to expand to. So that's why some organizations decide to set up their own innovation lab in Hong Kong. Of course, I think the fundraising bit, I don't have to elaborate too much. It's just obvious. We have loads of people in Hong Kong doing early stage investment. To put in perspective, now there's an organization in Hong Kong called HKVCA, Hong Kong Venture Capital and Private Equity Association. It is the largest sort of private investors association. There are like a couple hundred members, and the money that this group of people manage is over 2 trillion with a T, not B, okay? 2 trillion US dollar, okay? This is a lot of even private capital. So for fundraising. So again, they don't necessarily have to invest in you to do business in Hong Kong. I mean, chances are they are also happy to invest in you to do like a Southeast Asian expansion and so forth. But then you have to be physically here to basically work the network and so on. So that's why some companies decide to set up a small team in Hong Kong so that to build the local connections so that for planning the round of home market expansion. Now, I can go on, but I'm sure that Ben can share some really interesting insights as well. So maybe I'll stop here and I'll let Ben and other leaders to comment.
Thanks, King. No, very good points. And I agree with what King says. I think reality is look at Hong Kong as a real testing ground. And what I would say, going to exactly what King said, if you can get through the regulatory rigmarole, particularly as a B2B, in a market like Hong Kong, you are very well positioned to deploy that service elsewhere. I often say to many of my clients, and we love dealing with B2B companies, that stop looking at your competition as local. The reality is you're going to be getting providers from all across the world looking to tap into Philippines once the VBs go live. And the more you understand about the way best practices are run in markets that are potentially on the front foot, such as Hong Kong, the better you'll understand how to adapt, pivot, and work out what you ultimately need to do to deliver what is a best-in-class solution. So learn from the successes and learn from the mistakes, right? Part of going through the innovation process is working out what doesn't work. And the reality is, transpose that knowledge to what you're doing onshore in the Philippines. And, there's no reason why I would say a Philippines fintech shouldn't be thinking global. Every single fintech in the context of if you tap in to a financial institution here, and I say it to all the B2B clients, don't forget your competition is in London and New York. Because unless your solution is 100% regionally or jurisdictionally customized or specific, the decisions around rolling something out globally across an organization will be made at that level. So you need to think and play the game at that level. So that's what I would say is a key takeaway from what you can take out of this ecosystem and what learnings you could apply back in the Philippines.
Yeah, actually, I would like to to commend the insights provided by King and Ben, and it really, in fact, that is really the way forward or the way to go, right? So, and of course, we look up to our our regional brothers in the Asia Pacific, specifically, for example, Hong Kong or Singapore, who have actually been more advanced when it comes to all of this, innovations, as well as in terms of providing the enabling regulatory framework. So, for example, we've seen Hong Kong or Singapore who came out with initially with digital banking licenses, right, or that regulatory framework there. But of course, also in the Philippines, we also thank our regulators for also coming up with our own digital banking licensing framework last December. So we are also anticipating the entry of about 10 digital banks backed by some foreign entities, to be operating in the Philippines. So the whole context here, or the entire landscape will now change in a way, because I would consider 2021 as the era of heightened collaboration, right? And of course, given the fact that it's more of competition, right? So while you have the local players in the Philippines who would have to, level up given the heightened competition, etc. So actually, I would want to cite three imperatives here, right? In the context of all of these things happening, because again, at the end of the day, the dynamic development and changes in the landscape is really something that would have to trigger the massive imagination of all players in the industry. So one, for example, I think the three imperatives. One is that in the Philippine context, there's a huge opportunity for all players in the industry, because there is still over 50 million adult Filipinos who do not have any savings account. I mean, there's a huge untapped market there, right? Second would be on how can the existing bank players or fintech players in the country be able to to keep their their base, their consumer base, and protect them from being poached by others. And at the same time, how can you be able to attract more customers to your fold, right? And of course, number three is on how you will be able to again cover as much ground as possible, because remember, the mindset of a consumer, it is now more geared towards contextual banking or contextual experience, right? So and they are so and each customer has different, practically we've been hearing a lot about personalization or hyper personalization, right? So the thing here is on how you can be able to really excite your customer and make them really transact or patronize your services. So I think that's the whole thing, and I really commend Ben and King here on the things that they've been doing in the respective jurisdictions.
Thank you, Sir Lito, for the very good points that has been raised. Gary, any thoughts?
Yeah, no, I think great points raised by the speakers, but and I actually, because we're obviously talking to a lot of clients, right? And those are the points that are actually literally happening right now, right? So you think about technology has made what I call, we talked about hyper personalization, right? But I also think that it became hyper competition as well because of the ease, right, to adopt technology across the globe, right? So for example, right, we've seen competitions all over the place, right, from every single continent you can imagine, and all talk about the same thing, right? So I'll just take a topic, right? Be it the way we do data technology, the way we do eKYC, it's every like Ben have said, right? There's no one. It's very difficult for anyone out there to claim that this particular technology only works in one or two or limited jurisdictions. But I think the differences here is your ability to be able to help, right, financial institutions to adopt, to be able to land it safely, and of course in a compliant way in the operating in the locations that we operate in. And of course, when we advise a lot of clients in the Philippines, we often talk a lot about the Hong Kong way of doing things. Not so because it's the only way, right? But it's one of the reference points that if we anchor ourselves on security and compliance, that sort of MA, the way they look about at security and compliance is world class in that angle, right? Similar to Singapore, right? I've done quite a bit of time in Singapore, MAS as well. So it gives a lot of our clients and ourselves a lot of learning points to see in the Philippines context. What other things that we need to cater for, of course, because it's like Lito said, it's in some sense a very different market, right? So the challenges are very different. So in Philippines, all of a sudden we talk a lot more about self-service kiosks, for example, as a way, right, to be able to have some still, it's like a hybrid digital and physical fit, but even though it's not, there's no physical person there, right, to do the servicing, but we have a machine there. But how do we then protect the machine, right? So now all of a sudden we talk about physical risk of that particular machine, in a particular province. So it definitely needs to evolve. But I think the good news for everyone is, as a result of a lot more competition, you have a lot more choices. But it's going to give you another challenge is, well, how do you filter it down to something that works for you? I think that's the most important part.
Great. Okay, I have here the next question. Since relating to the point that you highlight earlier, Lito, about heightened competition, right? There's a question here around how does fintech players or startups work with banks, and how does banks adapt to a more agile way of transformation right now? Because as you mentioned, heightened competition, there are banks in the Philippines right now wherein they build their own fintech teams, but there are banks in the Philippines that also decided to partner with existing fintech providers. So it's sort of a balancing act on a build versus buy scenario. What are your thoughts on this?
Yes, well, right now, as I've said, the good thing here is that the entire industry across banks, fintechs, and all these financial players in the industry, because of COVID-19, it has actually further accelerated the digital transformation of all organizations across segments, across sectors, right? So in the context of banks and vis-a-vis that of fintechs, I mean, the mindset right now is really collaboration, right? It is, there is no way by which one bank, for example, or one fintech company will just be able to, stand on its own and be able to just, service everyone, right? So the thing here is really having that open banking regime play a key role in really expanding your base, right? And because there's so much to be done, right? So, for example, another striking or another development in the regulatory aspect is that the BSP also came out with its own draft of what they call the open finance framework, which is practically open banking in the context of PSD2 of UK. So the thing here is, or EU. So the thing here is that the players in the industry, may it be a startup or a mid-sized digital or fintech company, or even a well-established traditional or legacy bank trying to be a neobank or challenger bank and so on and so forth, are now actually talking to each other, collaborating, and because the essence of having that open finance framework or open banking framework is really to empower more customers, right? To empower the end users, right? So, for example, if customer A, if a customer has an existing account with Bank A, for example, that will now be an ease of being able to onboard that particular same customer with FinTech B, right? So by way of extracting that particular data that he has, right? So the thing here is you are now practically opening up so many opportunities for the base, right? You're not just talking of the mass affluent or the mass market itself, but actually the entire spectrum of society, from social class A up to social class E.
Thank you. Thank you so much for the answer.
I guess I'll add a few words to Lito's point. Now, we have been, so both at work and also prior to my joining of Invest Hong Kong, I also been teaching FinTech in mainland China. So that's why I study quite a lot of the history of FinTech, dated back like 30, 40 years ago. Now, in short, I think to answer this question properly, it really depends on your own personal risk appetite. Now, if you are having like a big host of capital behind you, that you have loads of capital and you have big ambition, you have a strong team, everything, then go for it, right? B2C is the way to go. Because when you look at I think it was the CB Insights report last year, in which of the, I think 67 FinTech unicorns in the world, roughly 60% of those unicorns are in B2C. Okay, so the upside is B2C. However, because B2C, almost by definition, you have to spend quite a lot of money to do customer acquisition. So this is not the kind of game for everyone, right? Whereas the Grab, the Alibaba, right, the Amazon of the world, they already got like loads of customers already. You just have to offer the banking services once they get the license. So that's why for them, the customer acquisition cost is much, much lower. So that's why B2C is not for everyone. So therefore, to narrow it down, then basically, I think the B2B focus can be relatively more achievable. And for that, there are different segments in terms of like the banking, right, the insurtech, the regtech, and whatnot. So I think each of them have their own characteristics. In a nutshell, the harder it is from a domain perspective, like regtech, so the higher the barrier entry. So therefore, once you get in, chances are that you will survive in the long run. And obviously, assuming you have those kind of background, versus something like payments, the barrier entry is much lower. A lot of people can get in, but then they may not survive, right? So again, to answer this question, I think it really comes down to the kind of resources that you have, the risk appetites, and ability for you to secure capital. So this is my 2 cents.
Yeah, I mean,
Very good point.
just a final thing on that. It's interesting because you mentioned the B2C play. I'm friends with a lot of people in the VC ecosystem here. 2 years ago, when I was speaking to them prior to WeWork going a bit defunct, everything was B2C. And the valuations and the growth was driven by investors that wanted to see huge top line growth in user base. And their view was, we'll work out how to monetize it later. But if you look at many of these businesses that were running at a loss, Airbnb, you name it, like I can give you every single business and I'll say that P&L at the end of the year was negative. But the environment has changed. B2B has become a lot sexier. And the reality is B2B as a business is very sticky if you can get in long-term contracts, and the margin cost of deployment is hopefully significantly less because a lot of people are using partner channels and referrals and obviously building relationships on that. To King's point, I completely agree. If you go organically and try to build your direct-to-consumer business, the customer acquisition costs can be exorbitant. It's quite a different proposition because if you're looking in Hong Kong, they're building customers from scratch as new banks. If you're looking at somewhere like Singapore, Grab, who has a bank, already has a massive customer base, right, with captive users of the Grab app. So it's quite a different like market dynamic, and looking, they've got the customers there now. How do they convert them into high value financial services products? So just some food for thought.
Yeah, and I'll add a quick point also, because really there was a point that Mikey asked around, as a fintech or as a bank, right? How do you work with each other? I think you need to be very clear of where you want to play and what do you want to do, right? So do you want to own the end-to-end life cycle, right? From sales distribution all the way to the managing the product, what I call product manufacturing, because they come with a different cost profile, they come with a different risk, right? So your ability, but of course, I also, as a word of caution, right? So there could be a tendency that you go, okay, I just want to outsource everything, or I want to bring in partners for everything. Now imagine you have a team of 11 star players. It just won't work, right? You won't have your ability to coach the 11 star players to work with each other will be extremely difficult. So you've got to be very clear, right? As a financial institutions, is what are, of course, know your business, but also know what your organization have in terms of capability, and whether you have the ability to integrate, right, different fintech solutions, for example, or different platforms, and to make it work for you, right? So it's not just about, because a fintech, I've seen many fintechs where it does really well in one organization, but it just doesn't work in another. Not because the solution doesn't work, but it's the way it got brought into integrating inside the financial institutions, the machine, right? It's not just simple, it just wasn't compatible for many different reasons, right? People issue, process issues, technology issues, so on and so forth. So I think the ability to work with it, you've got to have an open mind, and you've got to be open to let things go, right? If you're going to bring someone in, you've got to let that portion go and really work with them so that their capability actually can help you to serve your end customers better.
Thank you, Gary. I think for the interest of time, I'm going to be running through one more question for the panelists. So for the audiences, we are running through the questions as part of the panel right now. So please bear with us. There's one question here wherein, since Philippines is such a cash-rich economy, right? How do we successfully transition towards reducing that dominance of cash right now? So problems relating to anti-fraud, cash-in mechanisms, and so on and so forth.
Okay.
This might be a question for you, Sir Lito.
Yeah, yes. I think that's a good question, though, because I think in the recent report made by the government, specifically the Bangko Sentral ng Pilipinas, as well as the Bureau of Internal Revenue, that is actually the Philippine agency, a government agency that is in charge of collection of income taxes. So one, on the BSP side, they cited that the ATM withdrawals in terms of volume went down during the pandemic, as well as the transaction of as check transactions over the counter. Because of course, a lot of bank branches have been closed during the hard lockdown. And while the electronic fund transfers, specifically our InstaPay and PesoNet, skyrocketed, in terms of having a high double-digit growth, during that time. And so far as the Bureau of Internal Revenue, they also reported yesterday in a news report, in a news article, saying that 82% of their tax collection was coming from online transactions. So this is really good news for all of us, because remember that the chunk of it being cash rich in the Philippines in terms of financial transaction would be more the P2G transaction, right? Payment person to government, right? And even government to persons, right? So because the chunk of those monies are actually generated from that, at the same time also on the businesses, right? Such as, for example, bills payment, etc. But the thing here is that for government, because that is a huge segment of huge pillar of the digital playbook that we're talking about. So the mere fact that the government is now the one pushing the envelope to ensure that we come to that level of practically promoting digital economy is already there. So I think those numbers being reported by government very recently are enough proof that I think we are on the right track.
I think just one more critical point is really, and this will take 10 seconds, the evolution of central bank digital currencies, right? And if you want to move to an online payments world and facilitate digital transactions, you're seeing the growth in the ECNY initiative in China. Overall, this is going to paint a picture for ensuring that the country is digitally enabled. And obviously, China is starting from a position where people are much more used to online payments, but and it's much more habitual. But I think catalyzing that change through regulatory reform and actually deploying that out to the mass market will ultimately change behaviors in a way that people get online. And I think the key thing that you need to keep track of in a market like the Philippines is looking at like mobile penetration rate, IoT access, right? So provided they have access to that, then you can go through and pay, right?
I think just to add to what Ben said, I think corollary to that would be, having to really push for financial education and digital literacy campaign, because education is key, right? And awareness, right? And you talk about, while we have a high mobile penetration rate, right? And Philippines being the #1 country with the most number of social media posts, right? We have to really ascertain on how we can leverage on this mobile technology for financial use, right? And you're talking about the e-currency or all of these things, right? But I think that is something that we are really trying to do now. Insofar as, of course, on the other side, the flip side of that is also the establishment of that certain level of trust amongst the consumers, because of course we know that fraudsters, cyber attacks are also prevalent nowadays, right? Especially at the height of the pandemic. So I think it is a matter of how we balance we do a balancing act between those technology and having to have that really that education or awareness campaign put in place.
Completely agree. Yeah.
Thank you. For the interest of time, I hate to cut this discussion short. You have access here to the audience. To the audience, you have access here to all the thought leaders in this group. I'll just flash one last slide from our side. So we covered today the impact on what's currently happening in the different markets in Hong Kong and the Philippines right now, and ourselves in Alibaba Cloud in the Philippines, we're doing our own momentum in terms of making sure that there are independent audit reports with our cloud platform in adherence to the applicable circulars of BSP. There's also a FinTech user guide. You can check this, our own trust center in the Philippines. And thank you for everyone's time in this session. And we hope that we were able to impart ideas, best practices, and insights across the two markets. Thank you so much, everyone.
Thank you.
Thank you.
Bye-bye.
All right. Bye.